This is episode 1107.
In the case of Bill, AI priorities are now woven throughout the entire fabric of the company, across every discipline, every department. Yes, there's some opportunities to invest more aggressively, and sometimes that involves trade-offs. But making sure that there's a solid understanding on what you get for the investment and what the paybacks are. And there could be instances where you're investing across multiple time horizons. So maybe there's a set of initiatives that will impact the current year that you're operating in, whether it's financial or customer results or otherwise. And there's some other ideas that maybe take 2 or 3 years to mature. So getting that right horizon, investing, and if it's out there on the horizon a little bit further, then maybe there are some prove-it milestones that can be helpful.
Hello, our guest today is John Rettig, CFO and President of Bill. What set John's CFO journey apart from most is not just its length, spanning more than 2 decades, but its unusual symmetry. His CFO career roughly divides neatly into decade-long tenures. First, helping scale a digital advertising firm from $15 million to $250 million in revenue, and now serving as CFO of Bill, where he's helped lead the company for the last 10 years from a startup to public market success into a new growth chapter. We'll hear all about it. We begin our discussion by asking John to reflect on that remarkable arc. Our talk with CFO John Rettig begins after this.
When it comes to company spend, most finance teams are on defense, reacting to surprise spend, chasing receipts, saying no. But there's a better way. Meet Brex, the AI-powered spend platform that boosts a company's control, earnings, and speed. 99% of customer spend is compliant. 11 million hours saved on expenses and accounting through automation. $681 million plus dollars back to customers in business building rewards. Make every dollar count with Brex.
Hello, we're speaking with John Rettig, CFO and President of Bill. John, welcome.
Thanks, Jack. Great to be with you.
John, it's nice to catch up with you. I was just looking at your tenure, nearly a dozen years in the CFO office there at Bill. So we're going to ask you to look back. We might even ask you to look back further than that. I saw you had another CFO tenure that was quite lengthy as well. But take us back in time before you were in the CFO office. What we want to know is, how did you get there to start with? Can you recall for us, what were the experiences that helped advance you there?
Yeah, sounds great. I'll take you way back just briefly here to mention that I studied economics and business administration in college and was exposed to investing from a very young age just through family connections and whatnot. And so thought that's what I wanted to do. And an interesting note was that my first job opportunity and interview at an investment firm happened to occur on Black Monday when the stock market fell 22%. It was a surreal experience, to say the least, and on the spot made me rethink what I wanted to do with my career. And I ended up switching gears and doing an accounting job as the first opportunity I had out of college. I thought, the language of business, great way to learn. And for me, it meant that I got to own the books and be responsible for the P&L. And I learned a ton about how things actually work different than, what I might have learned in school. And the other benefit was that I was, at a pretty young age, the person in charge, managing a small team at a small company, made a bunch of mistakes, and learned very quickly, how things work. And then another experience that led me on the journey to the CFO role was just my first job at a tech company. I learned after a couple of positions out of college that I get bored very quickly. So traditional industries like biotech and transportation, which is two industries I was in, they just move too slowly. And so My first job in the tech world was leading FP&A for a public company called Excite way back when. And it was in this role that I was also exposed to some areas outside of finance, in particular sales operations. So I managed a team that worked very closely with the sales org to drive forecasting, territory planning, quotas, comp plans, all those things that, finance people are generally aware of and sometimes involved, but maybe not directly so. And this was actually a really critical experience for me to connect the dots between different parts of a company. And I learned great lessons about partnering and enabling other functions in the company. And, often finance is about control, or there's a control mentality. And I learned very early through this role that enabling growth is a really important part of the finance profile. And really ever since then, I've had broad roles that have typically involved more than the strictly defined finance functions, usually some part of an operational execution role. That's been very valuable. It's really made me, I think, a better finance leader by being grounded in the business and execution and operations side of what a company does.
Your earlier CFO tour of duty, were you recruited as a CFO, or did you join the company in a more junior role and advance into it?
Yeah, so I've had 3 CFO roles now. The first one was through a personal connection, through a schoolmate of mine way back when, and then that didn't last too long. It's a Series A company. And then I spent another 5 years doing head of finance roles, but not the actual CFO role in smaller organizations. And then my first CFO job after that was I was recruited in as the CFO, and then obviously same with my current role at Bill.
And I'm wondering the weight class of company. Again, you had a long tenure at that company, I believe, perhaps 9 years. I'm wondering how the company grew during your tenure. What was the size? And I'm wondering if it was similar in size to Bill when you joined it. What would you tell us?
Yeah, it's very similar, actually. So Exponential Interactive was the company in the ad tech space, so digital advertising. We were about 50 or so employees and let's call it $10-15 million in revenue. So pretty good scale from a revenue standpoint. When I joined, we grew the company to about $250 million in revenue from one office in the San Francisco Bay Area to operating in more than 20 countries globally, with 1,500 employees. And so all the things that come with that kind of growth, both from a finance infrastructure and planning standpoint, as well as just capital markets and M&A and global expansion and all those things. So that was ideal from a training ground perspective to when I joined Bill, which was $13 million in revenue and about 140 employees back in 2014. But that scaling experience from Exponential, I think, was the right recipe for what we've done at Bill.
I usually ask this a little later, but I'm curious, when you first stepped into that CFO role, and again, you said you had an earlier one that was a Series A. It sounded like a small and shorter chapter. What is it that you wish someone had told you? You arrived there. Were you completely ready for it? Were you on board and let's do this?
It's a good question. I think you always learn a lot more once you're in the seat than you learn from the outside, frankly. And so there's some aha moments. Not all of them are great, but I think the learning curve and the journey of experiencing new things and driving change and setting the course and priorities. Progress doesn't always come in the form of a straight line. The path to success isn't always, linear, and there's a lot more learning that comes from maybe failing here and there than just success. It's super obvious to me now, but the importance of having a great team, who have experience or a trajectory to help the company where it's going, not just where it's been. Great infrastructure from a finance perspective, specifically, and then a business model that's durable and a company that, has a right to win. Those are all things that I think you get a lot closer to when you're in that CFO role, potentially for the first time, and you have to actually enact change and have a positive influence on some of these things.
One last question regarding the journey to the CFO office. As you look back, was there one pivotal career decision? And you shared some of them with us, but was there one pivotal one you made that you think advanced you or accelerated your trajectory in some way to the CFO office?
I think one of my mentors, way back when, after my first tech job, I was describing what I was doing and the areas that I wanted to expand my experience in, and they were very tactical, if you will. They were about, I want to do more in this area of finance and that area and so on and so forth. And his advice was, be the person in charge. Like, take a senior most position where the buck stops with you. Can be a small company, it doesn't matter, but the type of learning and the decision making and the calculus that you'll have to execute on by being the person in charge will accelerate your learning and your growth as a leader. And so that's actually what I did. Not too long after that advice that I received, and it was, I think, transformational for me to understand how all the pieces fit together, the importance of the bond and the partnership and relationship between a CFO or a head of finance at that time and the CEO, and the impact that you need to have beyond just the numbers. It's not about reporting what's already happened. It's about influencing what's going to happen. And so fairly early in my career, taking that leap to taking a senior most position, maybe when I didn't have even all of the experience that might be required on paper for that role, I think was pivotal for me to develop my own, roadmap from there for more senior leadership.
Was there ever a role in a large corporate enterprise that you were being recruited for and you just realized, I would have to be on a waiting list for leadership opportunities there. I can become a leader on this trajectory much, more swiftly.
Yeah, that's exactly right. So even my time in that first tech company I mentioned, Excite, which later became Excite at Home through a big merger, and we did tons of capital markets activities at a crazy time in the capital markets when capital was cheap. I think my role and scope had grown even at that company enough. Had, I think, 75 people on my team. Reported into the office of the CFO. I had sort of lost track, even at that scale, of how what me and my team were doing day to day impacted the overall company, as opposed to maybe the division and the set of products that my team was leading. And that's actually when I made the decision, rather than continuing to try to scale with larger companies, I did the opposite. And I went to a Series A company that had raised $6 million and had 20 people in the business, because what better way to impact the entire company? That obviously has its pitfalls too, particularly if you don't raise Series B. But it was that really understanding how you fit into the success of the company that was critically important to me.
Yeah, and making an impact. You needed to see it. Yeah. Okay. Well, one last question just about recruiters. Had you relied on them along the way, or was it more your network as you advance, even to Bill? Were recruiters involved?
Yeah, so I've maintained relationships with recruiters throughout my career, but I'd say most all of the positions have involved some personal connection, maybe through a recruiter, but it's a board member or an exec or the CEO of a company you're going to work with. I haven't had a lot of experience with cold introductions purely from a recruiter standpoint.
Given your long tenures, I think they're kind of frustrated by you. But John, let's talk about Bill now. Tell us about this company today. It's certainly a different dimension from when you first arrived there. But tell us about Bill today. What's it about, and what are its offerings today?
Yeah, so Bill is a platform for small and medium-sized businesses, SMBs, to automate their financial operations. So things like accounts payable, accounts receivable, corporate cards, and cash flow management. As you mentioned before, I joined Bill about 10 years ago, came for the people, the culture, being able to be close to a product as a finance person. The product is basically for finance people. I'd never done that in my career. And frankly, the size of the market opportunity I was looking at through the discussions with the management team and CEO, Renee here, I was looking at the product saying, wow, I wish I'd had this at my, prior roles. And so I knew it was a big market opportunity, but in fact, that's the one thing that I got wrong, because I thought it was a 10x growth potential, which my prior company, Exponential, we grew 10 or 12x in the time I was there. It turns out it's 100x growth potential. So the business is, much bigger today, 2,500 employees, 500,000 customers, a network of 7 million members that those customers interact with, $300 billion in payment volume, and $1.5 billion in revenue versus that 13 million when I joined. So it's been an interesting journey. And what really makes us unique is that we started with difficult problems that most all small businesses face, and we focus primarily on small businesses. So legacy, inefficient paper-based processes, and we set out to automate them. So we're experts in workflow and collaboration and those types of tools. And because we apply these capabilities to financial operations, we get to do payments. That's our primary revenue driver is payment transactions. And so that's really what sets us apart. And because we deal with small businesses and their money and those business owners, we really become central to how they operate. We're like mission critical. It's not something you try out for a month and then you decide to go back. We become the center of their financial operations, which means we're sort of integral to their success or their growth, what they're trying to do as a business. We like to say that the Fortune 500 companies have, tons of people and obviously lots of resources and expertise that they can, call to bear to automate their financial operations and make great decisions and that sort of thing. That's what we're trying to do for like the Fortune 5 million. Like most small businesses are tiny and they don't have the resources or the capability of bigger companies. And so that's where we come in. It's not just financial operations, so that's what we're primarily focused in. We eventually become an enabler of business growth for small businesses because they get insights from our platform and their finance teams get to free up a bunch of time that they might otherwise spend on, legacy systems and processes in the back office. They devote that time to their business and running, a better operation. So that's a little bit about us.
Well, there certainly have been some milestones in the last few years. I know turn back the clock. There was an IPO on your CFO tenure, of course, and there's been a number of acquisitions that made headlines, and that's how I really became aware of Bill. There seemed to be a string of acquisitions. I was always curious as to how that might have expanded Bill's total addressable market. What would you tell us?
Yeah, that's exactly right. So going back to the IPO journey, we went public in 2019. And in preparation for that, we were pretty deliberate that the reason we wanted to go public was access to the public equity markets. It was about capital. And we had lots of ideas about how to invest in and grow the business by accessing capital. So we tried to avoid the IPO being the goal as opposed to the IPO just being a milestone on our way to being a successful public company. And once we got access to the capital, we continued to invest in our business capabilities from an organic perspective, building out new products, new sales channels, and also through M&A, where we bought our way into adjacent parts of the back office financial operations. The largest transaction we did was a $2.5 billion acquisition of a company called Divvy, which brought us into the corporate card market and effectively significantly increased the market that we were addressing for small businesses. We subsequently did not too long later, another transaction in the accounts receivable space that brought us a global customer base, 200,000 customers who are service-oriented businesses in the trades, and that was super interesting. And we also did an acquisition more recently around analytics and insights. So all of these discrete acquisitions actually fit together in terms of our platform strategy to deliver more capabilities to small businesses.
What, just in terms of your acquisitive nature, is this will this continue? Will we see more acquisitions in the coming 12 months?
Well, we as a company and as a management team and board here, we have a growth bias. So the market that we're going after is still early in its overall evolution. It's not like some mature markets where, let's say, technology has been adopted and then there's another wave of new solutions that drive an upgrade cycle. We're still in the first adoption cycle. The pandemic, when it came along, did create more awareness for small businesses about some of the capabilities that are out there that they might not be leveraging, and that's helped. But since the market is still evolving, we have a bias for growth, and we'll continue to invest both organically and inorganically. We see lots of opportunities to potentially shorten our time to market by deploying capital to acquire companies. It's not always faster. It comes with challenges around integration and cultures and other things like that, but it's something that we're always looking for.
Turn back the clock a few years. You added the title president. And what I'm wondering is how your role has evolved as Bill has scaled in these and now in the post-acquisition and integration sort of chapter here. Can you tell us how your role has changed, where you spend your time?
Yeah, so as I mentioned before, most of my roles have involved some operational, responsibilities historically, including at Bill in the CFO role, where I was involved in, risk management and analytics and some of our other capabilities. With the addition of the president responsibilities, that includes go to markets or sales and marketing functions, business operations, strategy, and related functions. So it's a broader mandate. And it really has helped bring me closer to the execution layer of the business. And even with my CFO hat on, it has reinforced for me the importance of the CFO position and specifically, and maybe finance leadership generally, being really close to the business. That the finance function and finance leadership not being as much of a back office operation as being very forward and helping enable the business growth. Because I see where there's challenges with resource trade-offs, with resource allocation and investment levels, the need to better understand returns when we put money into programs or motions around acquiring customers or supporting new products. Having that strong finance partnership, I think it helped shed a little bit of a new light on the importance of that partnership for me.
Can you share some, I don't know if it's a story or some insight into the role finance has played in shaping that go-to-market strategy and the pricing strategies at Bill? Every organization does it a little differently, and curious as a leader, the finance leader, how you might have had a hand in shaping that go-to-market strategy as the company scaled.
Sure. So we have a great go-to-market team across sales, marketing, product marketing, and one of the tricky things for Bill is that because we serve small businesses, that means they have a higher business failure rate. They have higher attrition rates. They're lower value on a per customer basis. And so it's critical that not only you have a great value proposition for your product and small businesses want to use it, but that you get the unit economics right. You can't just spend your way to acquire customers and penetrate the market without an appropriate payback period or return. So the partnership on the go-to-market side has been a lot about visibility and transparency in unit economics and understanding the implications of different types of investments and the cycle of the value of customers and customer cohorts over time, because it's that information that really allows the marketing or sales specialist to make the right choices about where to put their marginal dollar or how to better support the customer acquisition engine. So I'd say a lot of the effort has been around understanding that ROI, which has led us to embracing partnerships as one of the primary motions for our business. We not only serve small businesses directly, but we also are a great partner to the trusted advisors that small businesses have. In our case, that's mainly accounting firms and banks or, financial institutions that small businesses work with. So they also leverage our tools to serve the small businesses that we work with. And so the understanding the efficiency and the viability of working through partners, in addition to what we might do directly to acquire customers, has been an important element, foundation, frankly, of our go-to-market motion.
What are the metrics then that you're looking at, or the KPIs you personally track to understand, the customer behaviors, the customer retention? Tell us what you're looking at there to make certain you understand how they're behaving.
I think the most important thing for Bill, because of the SMB focus, is engagement. So how are customers using our product? Are they adopting more than one product, so multi-product adoption? Are we growing our footprint with customers? Because it's a proxy for delivering value. So we're trying to make it efficient for small businesses to run their financial back office, to free up time, for them to do more in acquiring their customers or developing products or whatever the case is. So we look at things like retention, not just of customers, but revenue retention. In our case, payment volume and how much volume is flowing through our platform and things like that. So really trying to get the pulse of how customers are using our product and how that translates into the value that we're delivering for them and how we support them.
Interested to learn if you have organized your FP&A team. I know you have an FP&A leader, or perhaps, but can you tell us something about your FP&A mindset and how you have organized that over time?
Yeah, so it might have a little bit to do with my, journey to the CFO role was through FP&A and business planning and operations. And as a result, I usually start when thinking about organizational development to make sure that the forward-looking, the front-facing part of finance, strategy, planning, prioritization, and forecasting, all that stuff is a great foundation. So and it's often, said without a solid, strategy and set of priorities directed at the areas where you have the right to win in your business or your market that you're competing in, all the financial plans and forecasting and budgets and other things you do aren't going to be worth very much. So I think job one for me has always been to build the right FP&A team to support the business through strong partnering. Sometimes that involves making sure you have the right skill sets. We're a payments and SaaS business at Bill, so we've evolved the team over time to make sure we have the appropriate business model, expertise, financial and business acumen and things like that. That's not to overlook the important partnership that happens between FP&A and the core technical, accounting and reporting teams. We've got to get it right in all dimensions, but really making sure that the FP&A team is set up for enabling the business, whether that's product lines or business lines, through partnering, delivery of insights as it relates to both performance and return on investments and key leading indicators has been critical.
We want to touch on AI with you, of course, and we begin by asking, how is Bill currently using AI? We know it's most likely automation, but to enhance finance workflows. Let's begin with the finance department. How is AI being used?
Yeah, it's a great question, and I'd say it's amazing the pace of change with AI over the last couple of years in particular. And if AI isn't a central investment theme for your business and finance team, then you're likely, behind the curve. At Bill, we've actually moved pretty quickly to adopt AI tools for customer support, sales processes within our go-to-market team, risk management related to, better managing credit exposure, all these sorts of capabilities. As it relates to the finance function specifically, we're investing in tools to help with process automation. So think large-scale reconciliation tasks involving, billions of dollars of funds and millions of transactions and things like that. SOX documentation and walkthroughs and other process automation. I think we're a little bit earlier in the journey, but excited about what we've learned so far about the significant opportunity for AI to help us with the forward-looking parts of finance, so the modeling, the predictive capabilities, and analytics. Those are things that are kind of up next for us. And frankly, AI is going to change the entire role of the CFO and finance to be, I think, much more impactful and delivering even better value for the business.
Can you give us a sense of the AI mindset there, though, across the workforce? Is it the role of finance to say, gee, we're giving you these additional licenses. Let's see how you're doing in 6 months' time. And then we'll discuss those hires. I mean, what is the tenor of the conversation?
Yeah, there's, I think at great companies, there's always more ideas than there are people and sometimes even capital to pursue. So at Bill, we have a ton of innovation ideas that include, AI and shifting investments there. And it's even true in the market that we serve. There's been a bunch of data recently that says, small businesses believe AI is going to impact their business and that will increase significantly over the next couple of years. I'd say that the role of finance is to always be the linkage between the strategy and priorities of the company and resource and capital allocation. Maybe not the decider. It depends on the part of the business, but in the case of Bill, AI priorities are now woven throughout the entire fabric of the company across every discipline, every department. Yes, there's some opportunities to invest more aggressively, and sometimes that involves trade-offs. But making sure that there's a solid understanding on, what you get for the investment and what the paybacks are. And there could be instances where you're investing across multiple time horizons. So maybe there's a set of initiatives that will impact the current year that you're operating in, whether it's financial or customer results or otherwise. And there's some other ideas that maybe take 2 or 3 years to mature. So getting that right horizon, investing, and if it's out there on the horizon a little bit further, then maybe there are some prove it milestones that can be helpful. But at the end of the day, it's that partnership and dialogue with either functional or business leaders that there is probably an objectively right answer on the allocation of capital, in particular as it relates to the rate or the pace of accelerating investments in AI.
Have you done an offsite about AI? Has there been anything where you and the CEO have had a conversation like we need to put in greater governance or something,
Yeah, it's a good question. I think it's timely because most tech companies are going through this journey at some stage right now. In the case of Bill, we have a two-pronged approach to AI. One is, and we talked about this a minute ago, the internally focused efficiency and automation goals. And those are very important, and those will help the company scale faster and be more efficient. But the even bigger value creators are around how we leverage AI for our customers and our competitive advantage. And in fact, the senior leadership team here at Bill, I think there was 8 or 10 of us in a room for 3 days about 6 months ago, discussing, debating, maybe some arguing about where AI and the opportunity for us to create differentiated competitive advantage fits into our overall priorities. And one of the core discussions is around whether AI, as it relates to customer-facing opportunities, is an incremental improvement opportunity or whether it's actually a leapfrog opportunity. Should should the company consider cannibalizing itself by not just making the next best, product or feature based on where we are today, but completely eliminating the need for certain features by leveraging, AI. And these are important discussions. You can't do it overnight. And yes, there's, tension and debate in the room. But I think as a team and as a company, we're aligned around how big the opportunity is. And it's really the devil's in the detail around the sausage making of how to transition from an AI-assisted or an AI-influenced platform to being an AI-first platform. And in our case, we have a roadmap that will allow us to evolve our platform. I talked about how we're experts in process automation and collaboration and things like that. How that shows up is customers use our tools to create automation. We envision a future, and the team is aligned around this, that in the not too distant future, we'll have AI agents that are doing those jobs, as opposed to small business owners or their finance teams needing to leverage tools to do the jobs themselves. This is a whole different game that I think is going to impact, Bill, small businesses, and the market. And we're just obviously one segment of company that's going through a lot of these, I think, are exciting opportunities.
What comes to mind when we ask for a finance strategic moment?
Yeah, so I talked earlier, we discussed the importance of, CFOs and the finance function being very business leaning. How I describe that to some people is, and we talk about this internally at Bill, is wear the CEO hat as often as possible, not just the CFO or the finance hat. And I think where that's come, intersected with my career and aha moments is really on the M&A front. So we talked about this a minute ago when we were a young public company, doing, a couple $100 million in revenue and had a, $5 or $6 billion market cap. It wasn't an easy decision as a CFO to propose to the board and ultimately investors that we go spend $2.5 billion on an acquisition, which if you just look at the magnitude or the size of the transaction relative to the size and maturity of Bill as a public company, it was kind of off the charts. The reason for that wasn't just the financial modeling and the returns that we could generate from a cash flow and return on investment standpoint. It was about strategy and how to penetrate the market and how to take more of the market opportunity and bring it to Bill sooner. And there was, in addition to the opportunity that we saw and that I was vested in, there was also plenty of risk. But being able to lean in with conviction around being strategically convicted at it's the right thing to do, and backing that up with the analytics and the role that the finance team plays in diligence and really understanding what you're getting into, and then ultimately an integration and execution plan that allows you to deliver on your promises to investors, to the company, to employees. I think that was a moment that proved, obviously a moment that, was many months, but proved to me the value of that, wearing that CEO hat, being a business partner in the finance seat, not just the finance partner. And that was certainly a rewarding experience as well.
All right. Well, we'll enter our mentoring round where we'll ask you several quick questions intended to inform and inspire finance leaders. I actually want to have you look back on your Excite days where I think you emerged as an FP&A leader. And I'm wondering, when did you acquire your storytelling abilities? When did they first come into play? And I imagine it was in an FP&A role. It might not have been, and maybe you were gifted from early days. I don't know. But was that where they kicked in?
Yeah, I think FP&A is great, proving ground for storytelling. It's I think about connecting dots. and why things matter and why it makes sense. There is some order in connecting, strategy and priorities and investment and ultimately the numbers in a business. And I think my days at Excite, my first quarter on the job as the FP&A leader of a public company was the first quarter that we had committed to investors that we would turn from, unprofitable to profitable. So it not only changed the numbers, but a significant internal cultural change at the company to operate differently and profitability being a lens way back when that wasn't the most common thing. So being able to not only sell externally but weave the right story together internally to keep everyone aligned is really important.
Did you raise your hand often back then?
Oh, for sure. In what respect? Raise your hand.
For opportunities, for opening doors, career opportunities, I guess is what I'm asking about.
Yeah. So, I've been super fortunate at, working with, leaders who, have given me latitude to take on things and run with it. And it's actually formed a part of my own leadership persona. You don't need permission, and job descriptions just tell you what needs to be done. They don't tell you what can be done. And so find opportunities in particular outside of finance, find opportunities to get integrated with the business, learn more about what the company's doing. The more any finance leader or CFO knows about the business and strategy and priorities of the company, the better the finance leader they're going to be. So I've I think continually throughout my career sought out those growth opportunities, and I think one of the biggest lessons that I've learned is most growth, at least in my case, and I think this is true for a lot of people, comes way outside of your comfort zone. And sometimes you gotta, lean into doing things that you haven't done before, being willing to take the risks of failure associated with that, because the reward, from that learning outside your comfort zone often just accelerates your own, evolution to the next stage leader.
Something more on a personal side. Were you tested outside your comfort zone from your, teenage years on forward? I mean, were you in an environment where the adults around you tested you, wanted you to grow in that respect?
I think so. There's always some, element of that. I think back to even my first quote professional job. It was an internship, wasn't an actual job. I actually worked for a big bank, Wells Fargo Bank, in the recruiting department of all things. That's a long way from finance and CFO. But it was something that, I had an opportunity and it was an interesting, learning experience, my first exposure to, sort of the corporate world, and, opened my eyes a little bit to, doing new things.
John, we always like to ask our guests to reflect a little on the personal side. Is there something, I don't imagine you've been there nearly a dozen years. Your colleagues must know everything about you. But is there something many of the people in business might not know about you, peers perhaps, something from your past, an interest you've pursued?
Well, yeah, I have told a few people about that first job in recruiting, and it's been shocking for folks. But I'm a lifelong runner, skier, and I'm 11 years into my journey on a plant-based diet, and a long way to go. So those are some things that people probably don't know.
Was that decision, how many years? 11 years?
11 years, yeah.
11 years in. All right. So basically when you arrive at Bill, is there a correlation there?
Shortly thereafter. Yeah, I don't know. Was it a nutrition choice more than anything else? But yeah, it's worked for me.
Well, thank you for that. We always like to ask our guests if they have a book or a resource they'd like to recommend. It doesn't have to be a business book either. It might be something you escape with. Anything?
So again, this probably won't be surprising to you, but not directly down the lane in terms of finance. Two quick things come to mind. One, Never Split the Difference by Chris Voss. You might think it's just about negotiating by a former FBI hostage negotiator, and it is, but the reality is it's an amazing book to learn about psychology and human nature. And then a bonus book is just Unreasonable Hospitality, which is by Will Guardia, about the restaurant 11 Madison Park, sent to be the #1 restaurant in the world. Again, you don't have to care about food, but the takeaway is the power of exceeding expectations, and it's applicable to literally everything we do in every part of a business and just dealing with people. Just an amazing book.
Well, we're up to our final question where we ask you to look forward for us, and what we'd like to know are your priorities for the coming 12 months. What would those be?
So I'd say the biggest thing, we've touched on it a little bit, is actually to create the conditions of transformation for AI to drive a step function change in our business results, both internally, how we operate, and externally with delivering value for small businesses. And this extends to, operationally, financially, and all those things. And I think this is actually critical for my role and any CFO navigating the current business landscape, is really leaning into that step change function as opposed to an incremental approach. And obviously an important element to this from a finance function perspective is continuing to build the right finance team who are going to be like the future leaders of both Bill and other organizations. That's always a top priority.
John Rettig, thank you for joining us on CFO Thought Leader.
Thank you. It was great. Appreciate it.